piece of great news for sellers. If you're a home seller, this should be music to your ears. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the first week here in May of 2020. Lots of data to share with all of you, but before we go there, remember, if you're a home buyer or seller in today's market, there are so many little nuances, so many things that we cannot dissect or discover here on a general Silicon Valley snapshot. So for all of your unique situation and all of your unique situations and your unique needs, go ahead and text analysis to the number down below for a unique solution to your unique situation. So anyways, guys, we're here, we're in the midst of shelter in place. Some great news for all of you if you're a home buyer or a home seller. For everyone is that showings are now 100% legal. Private showings are now legal, of course, taking the proper safety protocols. I want to make sure that I emphasize that nothing is more important than the health and safety of everyone here in the marketplace. So just know that when I say, yeah, it's great because we can resume some sense of normalcy while still being smart, right? And still being conscious of the health and safety of everyone around us. And so showings are now legal. Staging is now considered an essential business as of today, literally today. Staging is now essential. So there's a lot of things that are moving in the right direction for the Silicon Valley marketplace in the sense of restoring normalcy again, right? And so when we look at the data, remember that we have the freshest data available to us for the Santa Clara County and San Mateo County marketplaces. And when we look at this is kind of reflective back on April. And there was pretty much the tale of two halves in April. The first half, we were still getting over the initial shock of shelter in place. I would say the second half, we started to see in the marketplace here, in the data and in the trends, that things were starting to regain a sense of normalcy. We were starting to see more buyers in the marketplace. We were starting to see more inventory come on. And as we look at the data today, we'll kind of see what that looked like, how that played out in April, and how we could expect May and the coming months to shape up. So when you see the graph below, you'll see that in April we had a total of 1,302 units in Santa Clara County for sale, and we ended up selling 767 total units with 601 pending sales. And when you when we look at that, we say, okay, well, what does that mean, right? Well, when you look and you compare that to last April, April of 2019, we had 1810 for sale, and we had 1235 sold. And so, in terms of overall inventory levels, we basically reduced the inventory levels by about 30%. And when you look at the April sold data, you see that that was reduced by about 40%. So definitely a little less demand than supply. Now keep in mind, this is a lot of that is stemming from sales that occurred, or most of these are stemming from sales that occurred in March, and things dropped off dramatically in March, obviously with the stock market coming to a crash, and subsequently followed by the shelter-in-place orders. And so all of that brought the Silicon Valley marketplace to a standstill. But if you've been watching these videos for any period of time, you'll know that over the last few weeks, we've seen some of that resurgence in the market, and from a buyer perspective, right? It was some of the demand picking back up, and almost to a point, or even to a point where the month to date data was showing us that we actually had more pendings, or more demand relative to the amount of supply that we had in previous years, meaning that demand was accelerating faster in today's environment than inventory was. Now, that is no longer really the case here in the first couple days of March. When you see today's stats, you'll see that we're down for sale month to date 47%. And down pendings 52%. So just a little bit more of a drop off from the pending side than the for sale side. But of course, we're so early on into May. Let's see how things play out in the next couple of weeks here. I would expect those numbers to, well, who knows? I'm not going to throw it out there. It's really hard to predict with any degree of certainty what's going to happen, but it is important to note that if you watched last week's video, the trend that we were seeing is that pendings were outpacing. We're seeing a lower percent change in pending sales than in inventory levels, meaning that pendings were outpacing demand. That is switched, right? That's flip-flopped, and so we'll see if that continues to flip-flop. But really, a 5% difference is not significant enough right now to be worried, for example, if you're a home seller. But it is something to pay attention to, because if the next 2 to 3 weeks we start to see that delta widen, just how last week I said if we see that delta start to widen, then we could say, hey, we're back to seeing more of a stronger seller's environment. Well, now if that delta starts to widen and we start to see pendings drop off even more, then we could expect to have a more buyer-friendly environment. But a piece of great news for sellers. If you're a home seller, this should be music to your ears. You see, the Santa Clara County sales price to list price ratio for the month of April, 102%, which is absolutely ridiculous. When you think about it, you know, the shock to the system, the hysteria, all the madness, and yet we're still looking at above 100% sales price to list price ratio, meaning that sellers are sticking to their guns. For the most part, we're not seeing sellers make any sort of rash decisions, and at the same time, I think we're seeing we're seeing agents set proper expectations with their sellers in this environment. And what that tells me is sellers are sticking to their guns, but they're also not significantly overpricing their homes, and they're also being realistic, right? Because we're seeing that homes came off the market quite fast, 17 days average days on market. Now, if you watch these videos back in middle of March, we saw the MLS do something unprecedented. They actually shut off days on market. Meaning that days on market have not been accruing for the last 45 days. That is now going to be coming to an end in the middle of May. For a total of 60 days, the days on market counter was not active. So that days on market that you're seeing right there, that low days on market, is a result, or is partly a result of the fact that there are a lot of homes that sold with 0 days on market. If they came on the market after March and then went into contract after March 16th, or whenever that whenever the MLS decided to do that, it was a couple days after shelter in place. But when the MLS announced that, all sales, or all homes that were on the market, so if they had been on the market for 17 days, say, then right now it shows 17 days, even on the MLS today. Now, if any home came on after that, it showed 0 days, and it's continued to show 0 days. So that's bringing down. I say all that to explain to you that has brought down the average days on market. But what we should also be paying attention to is the absorption rate. Because that gives us a better idea. You know, days on market, sales price to list price ratio, those are all great pieces of data and pieces of information. But let's look at the absorption rate. And it's something that I've looked at previously on other Silicon Valley snapshots. And what it tells us, it's basically the reverse of, it's like the reverse of months of inventory, right? Or the inverse. It basically measures how much of the current inventory is being absorbed by the marketplace, okay? So if we have, say, 1,000 homes for sale in April and 100 of them get purchased, then we have, if 100 of them get sold in the month of April, then we have a 10% absorption rate, right? 100 over 1,000. Now, anything above a 33%, if you watch these videos, is considered a seller's market. What we have here are closed sales as well as pending sales. So you can measure absorption rate from a pending and a closed sale perspective, okay? The difference is that pending sales measures homes that go into contract. Closed sales is homes that have completely closed versus that month. So we, as expected, see the pending absorption rate slightly lower than the closed sale absorption rate, but both are still 46% and 59%. Those are both still incredibly strong sellers markets. And so we're not even teetering into neutral market territory. If we see the absorption rate teeter into neutral market territory, we'll definitely let you know. And of course, this is what I'm saying, is that there are different areas where the absorption rate is going to be a little bit higher. There are different areas where the absorption rate is going to be a little bit lower. And so it's good to keep that in mind when watching these videos, because this gives you the Santa Clara County or San Mateo County in general, but then to delve into your neighborhood, to your area, to your specific situation is going to take a little bit more analysis. And so if you're interested in something like that, go ahead and text data to the number down below, and we will get you set up with these exact graphs, but for your particular unit type, so condo, townhome, single family, and your particular neighborhood via zip code or area. There's a lot of ways that we can really dig and delve deep into your specific situation. So just thought I'd throw that out there. Now, that's Santa Clara County data, right, for all residential units. Let's look at San Mateo County, because if you've watched these videos in the past, you'll know that I've talked about this trickle-down theory in the Silicon Valley, where things that happen in the Mid-Peninsula tend to trickle down into the South Bay. And so we are seeing now in real time that San Mateo County's had a little bit of a tougher time in this environment. Still, still not really that bad though. If you look at sales price to list price ratio was 98%. Now, sold to list price ratio, that graph you see below, is 101. So what's the difference? Well, sold price to list price ratio is what the home is currently listed for, and original list price is what the home was originally on the market for. So that indicates that there are definitely homes that are having price reductions, right? And so you're seeing that delta, that discrepancy between their original list price and their current list price, which is the list price that they went into contract with. So all that being said, 101 versus 98. What does that mean? Well, what it tells me is that there are definitely price reductions happening, meaning that sellers are a little bit more ambitious than the market is willing to bear. However, homes are still going into contract for relatively close to what the sellers were originally asking for. So when you think about that, on a $2 million sale, right? On a $2 million sale, if they had listed it, say for $2 million, a 98% sales price to list price ratio would be 1.96. So they're only coming down 40 grand on a $2 million purchase, which is don't get me wrong, it's a lot of money. But it is still a far cry from a buyer's market where buyers are getting homes for like 85 cents, 80 cents on the dollar versus what the seller was expecting. Sellers are being pragmatic. They're being very understanding during this time, is what I'm seeing from an agent's perspective, talking to my clients, my sellers that are currently on the market and that are currently getting or preparing their homes for sale. It's interesting to see the reaction, right? I think that everyone's very understanding during this time, but they're also not overreacting. And I think that's the punchline for today's Silicon Valley snapshot, is that this data should show you that Silicon Valley home buyers and sellers are leagues and bounds above, the vast majority of home buyers and sellers in any other part of the country. They're smart and they're practical, they're understanding, but they're also not rash decision makers. And I think that's incredibly important to remember as we head into these next couple of months. There is no external force that is currently forcing people to sell their homes. Will there be? Could be. If you've watched these videos, you'll know that there have been a couple of videos where I've talked about potential outcomes in which we could see a surge in inventory, but nothing. There's no data. There's nothing in this current environment to indicate that we're even close to being in a buyer's market, or even a more buyer-friendly market. When you look at the absorption rate in San Mateo County, you'll see that we had a 50% absorption rate based on closed sales, and also a 50% absorption rate based on pended sales. Still well above the 33% threshold for a seller's market. So we're holding strong, everyone. Here's the way I look at it. I think we're incredibly lucky. We're incredibly lucky to those who are watching. If you're watching this video, you're healthy. Wow, what a blessing, right? Especially in this time, and everything else is just gravy. It's just cherry on top. But life goes on, right? And we're in a point right now where we're starting to see life going on, people adapting, people changing. That was the theme of last week's videos, right? Is humans are adaptable, they're adapting to this, and they're responding. And what we see is, they're responding. They're responding though in a way that's practical, in a way that is not rash. And there is a very little overreaction here, which is interesting, and I think that should clue you in. If you're a home buyer, definitely know that other buyers out there, they are out there. There's less buyers. There's less competition. Definitely, buyers that are out there right now are overqualified to purchase a home, and so you have that to deal with. But on the flip side, if you're a home seller and you're looking at this data, and you've been considering selling your home, and you are going to sell in the next 12 months, my suggestion to you is the devil you know is better than the devil you don't. And this situation right now could get worse for you. I don't see a scenario in which this gets better for you if you're a home seller in the next 12 months. Could it stay neutral? Could it stay the same? Probably. Could it go down a little bit? Absolutely. Could it go up a little bit? That is a hard thing let's just say that's hard to imagine, right? So, but we're still seeing list price to sales price ratio. So let's pay attention to that number. Let's see what happens. But what we know is that when we have, and you'll see the data chart below, when we have a convergence in Santa Clara County of sold price to list price, sold price to list price ratio, when we have that convergence, you go back, you see a while back before that convergence happened before, 2-year period. So for a 2-year period, we've had a discrepancy or a delta. And so that's usually the apex. That's usually the peak of the market for that cycle. And so I expect to see a bigger discrepancy where sellers start to get a little bit more ambitious, but who knows? This is definitely a very interesting time. So I'm interested to hear your comments. I'd love to hear what you have to say, or if you have any sort of questions about this, I'd love to hear your comments below. What do you think the Silicon Valley landscape, the real estate market, is going to look like in 6 months? I'd love your input down below. But that's all the time we have for today, everyone. Again, if you have a buying or selling decision that you're going to be making in the next 6 to 12 months and you'd like our input, you can go ahead and text analysis to the number down below, and we will get you a unique solution to your unique situation. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I'll catch all of you in the next Silicon Valley Snapshot.